Hey, everybody, and welcome to the Stocks with Mark show. Actually, it's Tribal Trades, and we're doing our very first stocks show. I'm going to look at doing these on at least once a week. We'll see how it goes. If you'd like to see it more regularly, certainly put in the comments there, but we'll do that. I've recently started the altcoin show, and that I am going to do on a daily basis, or at least 6 days a week. And there was an overwhelming vote of those of you. Thank you for those who voted in the comments and said that you wanted to see that on a daily basis. So I will have the two shows daily, Monday through Saturday, which is the my daily crypto show, which is more heavily focused on Bitcoin. If you haven't checked that out, please check out my other YouTube videos. And of course, I'll have my altcoin show, which I'll be doing daily, and then the stock show, which we'll be at least doing weekly here. And we're going to jump into it. Before we jump into it, if you can do me a favor, smash that like. This helps get this content out to more people. And of course, we do have the Stocks with Josh Discord. The GOAT himself has the most incredible Discord. But certainly wanted to give that a shout out. I have my cheat sheet below, which is crypto and stocks. So please check that out. We will be referring to it in a moment, but let's jump straight into it. And I'm going to start off with a little bit of a stock crashes news event here. And the stock market crashed 90% in 29, 50% in 73, 35% in 87, 55% in 08, and 35% in 2020. And it recovered to new highs each and every time. Since 1926, so over 100 years, the stock market has returned 10.5% per year on average. Never let short-term fear control long-term decisions. So I thought that was interesting, and I think that's a good way to start off because there's been a lot of fear, and usually September is not a great month for stocks. It's not a great month for crypto either, by the way. So definitely some bearish sentiment out there. No green data for stocks so far in September, and so that's obviously hasn't started off that great well. Haven't started off that well. It's 3.4% down this month, and it's only the first 6 weeks. That's 1.7 trillion of market cap erased so far. Maybe rate cuts aren't what the market wants after all. Let's see how this all plays out because we are in Rectember or September. Let's have some September, hopefully, to finish. But September has been the worst month for the US stock market historically, with an average return of minus 1.2% since 1928. Seeing weakness again this year. We're down over 4% already on the month. So you can just see how September is such a heavily down month in comparison. I see this personally as a buy the dip opportunity, and I will be showing you my cheat sheet and the levels and the stocks that I am looking to pick up. Certainly, US households now have 40% of their financial assets in stocks. That's the highest percentage on record, with data going back to 1952. This kind of is good, but it makes me a little bit nervous as well at the same time, and certainly not short-term nervous, but certainly I will show you this next news event and tell you why a little bit nervous, because the yield curve officially has ended the longest inversion in the bond market history. And so it closed positive after 565 consecutive sessions of inversion. And it broke the previous record in the late 70s when it was inverted for 410 trading days. And so over the last century, most recessions started after the yield curve turned positive again. And so just to put this in perspective, historically, the flip back has happened after it goes positive. So in 2000, the flip back happened and the recession began about 10 months later. In 2000, it flipped back and the recession began about 4 months later. In 1989, after the flip back to positive, the recession began 13 months later. And in the 80s, 1980, 1981, the recession actually preceded the flip back. And so therefore, if we were to go based off, the times that it's happened afterwards and the more recent times, So we take into account the more recent data. We're looking at around about that, somewhere around that, you're around about that 8 to 9 month kind of area. So around about 9 months. Let's just say it's about 9 months. Well, let's just see what shakes out there. Now, in my opinion, again, this is not financial advice. I'm not a financial advisor. This is purely for education and entertainment purposes only. Are you not entertained, as the great Maximus Decimus Meridius said in the movie Gladiator? Pumped all the greed. Okay, so diversification is very important. If 1% of your portfolio was an Amazon in 2002, you're rich. But if 1% of your portfolio was a Blockbuster, it's irrelevant. I'm very sorry. That's why I'm happy to own dozens of stocks, says Brian. And certainly I would agree with that. Not too many stocks, but certainly enough to have that diversification. And certainly the Magnificent Seven is a strong basis of having that diversification in stocks. And I love this in graphics by Investing Visuals here. You can see NVIDIA does great graphics here. You can look over this. I'm not going to go through each of these. Up 112% year to date. Absolutely fantastic. And you can see done this for each of the ones: Meta, Apple, Amazon, Alphabet, Microsoft, and Tesla. So I thought that was interesting to share with the community, and you could certainly follow Investing Visuals or check out the thread here, maybe take some screenshots of this and say that I thought that was absolutely fantastic. Love those visuals. Great job with that. Also, we have the top stocks for 2024 so far, and I want to shout out, if you own any of these stocks, if you own any of these stocks, I want you to tell me which ones you own from this list. Because if you own these stocks and you bought them earlier in the year, you are going to be up pretty big, especially ASTS at the top of this list. So in the comments below, in the description, which of these stocks do you own? If you own a bunch of them, let me know. You're an absolute legend, I would say. Certainly, I don't own enough of these, but certainly I don't want to have too many stocks as well. It becomes a little bit more too difficult to manage those as well. One of the things that we're going to be looking at in the charts in a little bit as we do jump into the charts here is the 200-week moving average. And Charlie Munger, or hate him, the late Charlie Munger, all you ever did was buy high quality stocks on the 200-week moving average. You would beat the S&P 500 by a large margin over time. The problem is few human beings have that kind of discipline, and we'll actually have a look at that moving average when we jump into the charts. One of the stocks that I am looking to add to my portfolio, and I have not at this point, and I have added to this cheat sheet, is Palantir. And again, Investing Visuals done an absolutely fantastic job here. They do feel that it's overvalued, and a fair value would be $23. So that's very interesting. We'll look at the charts in a moment. So again, Investing Visuals here. They on Monday, September 23, Palantir will finally join the S&P 500. Here's an overview of the company. So check that out. It's got the pros and the cons, the valuations, quality, key metrics, etc. And so my eyes right now are on Palantir as a possible long-term home run hit in the stock market. The capitalist here says it's trading at 3x sales. This is too elevated. I wouldn't consider an entry here. Don't go FOMO. It's great, but it's not the only one at $30. So as you can see on my cheat sheet, everything in orange are the prices that have been hit. So I do have for Palantir a 28 to 30. It's a very loose, aggressive entry for Palantir. And so certainly, again, these are aggressive entries. I'm not recommending taking the aggressive entries. And in some cases, I don't take these aggressive entries because I already got in a lot lower. But if you were to take an aggressive entry, that's where it would be. Certainly, I've got the stocks that I'm currently trading. Palantir is the only one that I have not got at this point because obviously I will be looking to add. But certainly, you can see the value of 23 is where one of those analysts said that they felt the fair value was better at that point. So you may want to wait to 23. Remember, these entries, this is not financial advice. These are just some entries to build a position. And so sometimes all the entries get hit, sometimes one gets hit. And sometimes, but not very often, none of them get hit because they generally do have the aggressive entries, fairly aggressive, which is why they're called aggressive entries. But you can see here, we've already had great trade with NVIDIA, got in there and was able to take profits at 130 and looking to buy back on that dip. And then Tesla, fantastic trade, got in nice and low at 185, was able to sell and take profits at around 230, maybe it was around 229, 228. And then therefore we're looking to buy back on any subsequent dips on Tesla as well. And so there's a cheat sheet there. It just gives some entries there and also some take profits, which I haven't added yet, but I will add profits, take profit 2, take profit 3. But all I'm doing here, and I can actually do this over and over. For example, if NVIDIA came back to 90, I'm just back in again, and then it goes back up to 130, sell. Come back, buy, sell. And so you can actually just trade those ranges and make lots of money. You don't just have to wait till it goes up, take profit, it dips back, oh, now I'm in loss again, and then wait for it to get at 150, 160, take profit again. No, trade those ranges. This is what this cheat sheet is all about buying the fear, buying the blood, buying the dips, and then selling the pumps there. All right, we're going to jump into some charts here with just a little bit of time that we have left. And I did want to talk to you just quickly here about a couple of indicators that I use fairly heavily. One is the 200 EMA on the daily. As you can see, this has generally always been good times to accumulate. You can see if you bought when it hits this 200 EMA, you find that the profits are good. Boom, all the way up. And so definitely for Apple, this is at the 200 EMA is here. And like the Charlie Munger article that we were looking at before, that's all the way down at 162. That would be fairly bearish and that would be a major correction, but I do think that would still be a buying opportunity. I don't really see that happening anytime in the short term future, by the way, but certainly if the yield inversion flipping positive and having that recession within that 9-month period, we could see it come down to there. But certainly this is a value zone here at 200 for Apple. Now, if we go to the next one on my list, which is Amazon, we're actually at the 200 EMA right now. So this would be an area to dollar cost average in. Certainly, 200 moving average on this is the simple moving average. This is the EMA. And so this takes into account more recent, puts more weight more heavily on the more recent part of the 200, and this just averages it out. And so this 200 down here at about 146, that's not too far away. And we did see it wick down to here and was able to pick up some beautiful Amazon there on that the yen crash, the Japanese market when we had the yen cash carry trade crash down here. And so yeah, so look, this is definitely an area to jump in. ASTS, certainly the 200 EMA is a long way away down at $11. So this is way overextended, and I would expect this to possibly come back even a little bit further here. $22, $23 would be an entry. I've got a buy order there, and then possibly down around that. There is a fair bit of support around here, but certainly a little bit further down. But check my cheat sheet out there. But my most immediate area here, where I think would be a decent area to jump in, is going to be around that $22, $23 area there. Now, Coinbase has taken a bit of a hammering. So, of course, this is comfortably in the buy zone. And I did pick up some more of this around the 150 to 160. Certainly my next buy level here is down around the 115 to 120 area here, maybe 110 to 120 area there. I've got a buy order in there for Coinbase, but I think anytime a stock is on or just below the 200 EMA, usually it doesn't gravitate too far from it. And certainly also it usually doesn't stay under too long under there, but it's generally been good buying opportunities. If you go back and look, anytime it's come down there and been down there, it's been good, or come close to it even sometimes without touching it, has been good buying opportunities. All right, let's look at Google. We talked about Google. Google is below the 200 EMA. The 200 simple moving average on the weekly is down at 126. And so certainly that's not not that far away from price, but certainly, again, this is good value. I think this is good for accumulation. Would I go all in here at this price? Absolutely not. But certainly, this is a dollar cost average buy, and I did pick up some more Google at this price. We go down to Meta. Meta, again, right now, I'm waiting for here. This area here, this is my value zone here at around 463 down to about 450. The 200 EMA is down there. I think this will be good. I'm up about 200 or 300% on Meta. So certainly, even though on the cheat sheet I have buys higher up, again, you don't have to do all of those buys. You can ignore some of those buys. It really depends. If you've got no Meta, yeah, you might want to buy the more aggressive entries. But if you've been holding Meta and you've got the lower entries already, then obviously you may want to not to do that. So in my case, this is where I'll add my next Meta buy here. For Microsoft, the same thing. I'm up a huge amount on Microsoft. I got it on that trade back in 2022, but you can see the 200 EMA, what a great value buy. Even back in 2023, it was a great value buy. And so this, if you don't have any, this would be an area that I would dollar cost average in. Just a nibble, but certainly I think we could come back to these lower levels here. And so I'm talking about, I'm not picking up, I'm not picking up any Microsoft here because I have some around about $200 and on the side. And then we have MicroStrategy. Yes, added some more MicroStrategy here. The 200 on the weekly is down at 60. Certainly, my next buy level below this is going to be somewhere around the $90 to the $100 area here. Just in this area here, we have a lot of liquidity here. As you can see, down to this wick here at about 85. So anywhere between 85 and about 102 looks like a little bit of a fair value gap there, which could, some of it or all of that could be filled. And I wouldn't be surprised if that happens, although we are at the 200 EMA on the daily. And generally speaking, this has been a fairly good place, again, to accumulate, which is why I picked up some more MicroStrategy there. NVIDIA, again, we're coming back down to the 200 EMA, which is about $94, $95. Certainly, there's some bearishness there on the charts, which isn't super great. But as you can see, we've just got a series of lower highs there. And I'm more focused on this 200 EMA on the daily. This would be where I would accumulate some more. And of course, all the way down there, we have on the weekly quite far down there. So I'm not really looking down there at this point. I think we have a lot of interest there for NVIDIA at those levels. And then let's jump to one of my favorites, which is Tesla here. And Tesla, again, we had a bit of a downtrend. We broke out from there. But look, this is really, I think, quite bearish. We got the 200 EMA, which we saw on most of the charts, is actually below and actually dropped below. You saw what happened, and this just ended up being a great buying opportunity. And obviously, if you bought that dip as I did and rode it all the way to the top and took profits, and then I bought, and then I've been able to sell this dip, bought again, sold here at this level here. This is acting as resistance. So I think if you wanted to short-term trade this, certainly an entry around the 200s here, down to about 205. And then taking profits up at the 230. But also I do feel this can be good accumulation levels anywhere around 200 or just under 200 down to the 180s, 165s, 170s, this whole area here. But again, please check out my cheat sheet for those levels there. So basically, that's what I'm going to cover. For Palantir, here again, we're quite far away. And look, just so happens, look at that $23, the 200 EMA. Certainly because I don't have any of the stock, I'm going to be looking at jumping in around 28 with a small buy and then a further buy at 26. And my bigger buy here will be down here at 23. And obviously there is a Lux Algo order block. The weekly 200 EMA, 200 moving average on the weekly is down here at 18. That would be incredibly good value. And I would certainly be jumping in with a heavier buy at this level. Okay, so that's what we've got for stocks for today. I hope you enjoyed that. I did want to quickly look at the S&P 500 here. So as you can see, the 200 EMA is down around at about this 515 level. There's a big Lux Algo order block down at 500, and even bigger one down here at 468, and then we have the 200 weekly down at 440. But I do want to bring your attention, there's a double top here. That's a clear double top pattern that is fairly bearish. And so certainly if we see that continue to play out to the downside, I think we'll find some temporary support in this area here. And certainly that could be enough. Certainly with the elections coming in, we know that generally has been both bullish for the stock market and for crypto. So I wouldn't expect any major capitulation here to the downside. But certainly for September, we could see this come down a little bit further and maybe even down to this 200 EMA on the daily, which might be a good entry here or even down here at 500. But certainly there's been a significant drop with 40. And so certainly whenever we've seen here, look what happens. This has just been good buying opportunities. October 2023, many people thought that was fairly bearish. It was just an opportunity to buy the dip, just like the August dip was. And if we see a September dip here, I do think it will be another opportunity to buy the dip there. All right, that concludes my very first stocks show. I hope you enjoyed it. Certainly, if there's some stocks that you'd like me to look at and cover, please put that in the comments below. I will consider it. And certainly appreciate all of your support from the most amazing community that we built here. Only been going since late May, and we've already grown so quickly. Just incredible group of people. Love all the encouragement. Love all your comments and questions, and I certainly look to get back to those questions as soon as possible. So thank you all for tuning in. I appreciate you all. And as always, until the next episode, happy trading.